There's a ton of articles listing out the top 10 stock for 2025, and I've read them all, and I'll save you all the trouble of reading them by sharing them in today's video. In addition, I'll provide you my top 10 stock that I plan to beat the S&P 500 with, and I'll start off by showing my results from my top 7 stock that I picked last year. And I didn't do a top 10 last year, so you're just going to have to settle for 7, where if you do look at their 2024 performance, all but 2 beat the S&P 500's return of 23.3%. Granted, my managed portfolio more than tripled the S&P 500's return last year. And if you are curious, I do share my entire portfolio for free in my newsletter, which you can sign up for down below. Now, before I jump in, some of you may be new to the channel, and you may not realize that I retired a few years ago at 46. I know, don't let the gray beard fool you. I still have kids in daycare, so yeah, I'm pretty much the definition of a Gen Xer. Now, here's the thing. There's a lot of people on YouTube trying to get rich, but I'm on here as a hobby, simply to share with all of you how I got rich and how I maintain my wealth with all of my different investments. I love to research where to invest my money, and I also enjoy sharing that with others with my videos and also in all of those ridiculous spreadsheets. And for a little bit of context, I did make all of my employers a lot of money, and that carried over into my personal life. You see, my short career of 16 years was all about managing billion-dollar businesses for companies like Target and Amazon, where I've been lucky enough to work in high-tech industries, low-tech industries, and also I spent over 10 years in the military. I simply share this with you so that you know where I'm coming from, and I'm not just here to BS you. That's why I'm showing you right now on the screen what my top 10 picks are to beat the index for this year, where I hope that you can appreciate my upfront approach and maybe even earn a like or a subscribe. Because now I'm going to speak to why these are on my list, what analysts forecast them to be for the year, and then I'll compare my top 10 list to the list from those different publishers. And of course, I'm going to leave links to each of those articles so you can research what they had to say. I'm going to start off with one of the top companies riding the AI wave, where it's believed that the AI market will have a 37% annual growth rate for the next 7 years. This is why nvidia is at the top of my list, and why it had grown over 171% last year. Because it's a race for those companies to build up their data warehouses and their supercomputers for creating and building the best AI models and tools. And I often get pushback that AMD and Intel are going to take a huge chunk from NVIDIA. But seeing as how NVIDIA has over 90% of the GPU market share for data warehouses, they are simply too much of a powerhouse to lose traction anytime soon. Where their Blackwell production for 2025, it's already booked up for the year. And their latest exascale computer in a single rack is providing an insane improvement in LLM inference and training compared to the H100. And when huge companies are fighting to create the next level AI agents, they'll all want the best hardware from NVIDIA because it can handle more complex models in a fraction of the time. That's why analysts have NVIDIA with a 12-month forecast of over 35%. And whenever there's a dip in the market, NVIDIA is always my go-to stock to buy because I can count on it in the next few years to always outperform in my portfolio. The problem with waiting for quality stock to dip is that I don't like having my cash sitting idle, not working for me. That's why I love having a high-yield cash account like the one from public.com, which now earns 4.1% APY, where there's no fees, no subscription, and I can make unlimited transfers and withdrawals. And unlike a bank account, Public's high-yield cash account has 20 times the standard FDIC coverage at $5 million. And if you need access to the cash, it's available to reinvest at a moment's notice, which is great because then I can invest that cash directly through Public into stocks, ETFs, bonds, or even treasuries. For example, if I had $50,000 in my Public high-yield cash account waiting for buying opportunities, it could earn me over $2,000 in interest a year with their industry-leading 4.1% APY. If you're interested in learning more about Public's high-yield cash account, feel free to check them out at public.com/BWB or the link down in the description. The next company is Uber, where I think all of us recognize them as one of the top rideshare companies in the world. But are you also aware that they're working to become a top urban air travel rideshare company? They have a working relationship with Joby, which is looking to start their urban air taxi operations this year, taking customers on short trips of under 20 minutes versus a 1.5 hour car ride. Now, I realize that area isn't going to make them a ton more money, but it is a lot more glamorous to talk about. However, many people aren't aware of the branch of Uber called Uber Freight, which makes up 12% of their revenue. And Uber is also working on autonomous driving vehicles like so many other companies. Overall, they want to become a comprehensive transportation company. And when I look at their financials, their revenue and margins have been growing nicely each quarter for the past 2 years. And their debt to assets have also been in a nice decline. And the more telling story is that analysts have Uber with a forecast of 37% upside for the next 12 months. Let's move on to ConocoPhillips, which is a top explorer and producer of oil and natural gas. The stock is a bit of a stretch among my choices because I'm banking on 2 different factors that are going to drive up the stock. The first is that the Trump administration has proven to be a positive force for oil companies, as well as the tax breaks to all large corporations. And the second factor is that all those new data centers going up, well, they want nuclear energy, but it's simply not available. The next fuel source with continuous production and the cleanest fossil fuel available happens to be natural gas. And all those data centers consume a lot of energy. In 2024, it accounted for just over 4% of the electricity for the US. And in 2028, it's expected to nearly triple to 12%. Well, guess what? Electricity is going to get a lot more expensive real fast. That's where ConocoPhillips will benefit greatly from these changes, where the forecast is up 28% for the next year. And in looking at the basic information, Conoco has a low P/E ratio of 12.5, which is extremely good, and also a healthy 2.99% dividend. And even though the stock was negative this past year, in looking at historical returns over the past 30 years, they never had 2 years back-to-back of a negative return. Once again, this stock is completely outside of my normal tech focus, but it does have a lot going for it with a lot of potential value. And that's what I try to look for with all my investments. The next company is Amazon, where they are the largest online retailer, soon to be drone deliverer, also an online pharmacy and clinic, soon to be a satellite provider of internet, and one of the largest web services groups available. Oh, and they also own Whole Foods. And yes, the rumors are completely true about the crystals and the feathers required in the construction of new stores. Amazon offers a lot, but their web services and the AI models that are offered on their platform will give them a lot of runway this year. And when we look at their financials, they happen to be one of the best that you'll ever see. And that's why analysts give them over 12% upside for the year. And this is one where I believe analysts have them a little bit light, because if they manage to squeeze just a little bit more margin, then it's going to make a huge splash. Our next company is Taiwan Semiconductor, where they have over 59% market share in semiconductors. And their list of customers happen to be most every major company having huge growth from AI today. And they happen to bring on 2 new plants just this last year, one in Japan and another in Arizona, that are quickly going to add to their capacity. And they've also had so much demand that they announced that they'll be raising prices up to 10% in 2025, which will keep their margins continuing upwards from their already high 38%. Analysts show them with 14% upside, but I have a little bit of a feeling that it's a bit conservative given their booked out demand and price increases that are going to be passed along. My next company is Meta, which is the parent company to Facebook, Instagram, WhatsApp, and Oculus, where demand for their services just continues to climb each year. And they have so little overhead and such high margins that they make it a money printing machine. They happen to dominate social media, and we've all joked about their investments in the metaverse, but their Oculus is making some progress. Analysts do only have them with 11% upside for the year, which does sound a little bit low compared to other years. But when you look at their financials, they've been ramping up their margins for the past 2 years consistently, and their operating income in that gray line in the lower left is blowing up. There's a reason this is part of the Magnificent Seven stocks, and if they get major tax breaks from the next administration, then there's added upside that I don't believe analysts have fully baked in. The next company is AppLovin, which has been one of my best performers the past few years, where it was up over 700% just this past year. And if you don't know them, They are a mobile tech company providing tools and services to build and market mobile apps. There isn't that much competition for what they're doing, and they do have a major head start. Their financials look great for revenue and margin, but they've been missing on their forecasts in the lower right. This is a stock that I only buy on major dips, and 2 weeks ago it happened to drop 2% in just one day. And then of course it bounced back 4% the next. And for any smaller company, definitely wait on those pullback moments before buying too much at once. The next company is Google. And if you look at how their revenue breaks out, you can see how important Google Search, Cloud, and YouTube are for the business. And I'll admit, this is one of my few Mag 7 stocks that I cringe just a little bit because of how the DOJ is chasing them for potentially being a monopoly. However, proving a monopoly isn't an easy task, so it doesn't bother me too much. One thing that I'll be on the lookout for is if YouTube begins to air live TV sports unique only to them. I know that sounds like it's completely out of left field, but live sports is one of the only TV segments where sponsors will pay outrageous amounts because you have a captive audience. In the age of streaming, it's the only place for engaged viewers. Why else do you think Amazon has Thursday Night Football? Or why Netflix now has exclusive live boxing matches? If there is the slightest news of Google having exclusive live sports on YouTube, then the stock is going to blow up. Our next company is D-Wave Quantum, with the symbol QBTS, where quantum stock has been on a roller coaster lately. Where quantum computers, well, they're meant to work on complex models that would take conventional computers thousands of years to take on. But there are also a lot of hurdles associated with quantum computing, like error correction. But with the use of AI, I think that breakthroughs in quantum computing, it's going to happen a lot faster than people expect. D-Wave is also making recent news from their partnership with Kerasif Technology, facilitating quantum computing access to the US government agencies. Here's the thing with quantum computing. It's going to have a lot of ups and downs over the next 3 to 5 years. And I expect the technology and the resources to grow exponentially. I'm simply taking the approach of getting in early to be way ahead of it. As for a forecast, analysts see over 13% upside for D-Wave over the next 12 months. Just a quick reminder that I'm going to share the top 10 stock from several different articles that I'd mentioned from the intro and compare that against my list. The next company is ASML, which is a producer of photolithography machines used in etching wafers for creating semiconductors. And as all the big players in semiconductors keep building new foundries, then over 80% of them rely on ASML based on their market share. They are pretty much the only player that's in the game that's offering the equipment used in making new semiconductors. And in looking at the past 1 year performance, ASML was way behind everyone else. But the restrictions placed on China played a huge role in that. And when we now look at the forecasts, analysts see it with over 24% upside for this year. All the semiconductor companies are upgrading their current foundries and building new ones. So it's no surprise that ASML will be a huge benefactor from that. Now, I know that I'm going to get a lot of pushback from people being surprised that Palantir wasn't on my list. Palantir is a definite long-term play for me, but this is a year where I plan to wait on major dips in the price and then buy it. I don't expect it to grow all that much in 2025, but I will definitely keep buying whenever it makes the most sense. Now let's take a second to look at my list of top 10 stock from today. And let's compare that with several different publishers. At first glance, I'm a little bit surprised that only 5 from my list overlap with at least 3 others. And of this group, Motley Fool is the one that I agree with the most, well, at least outside of my own. The one from US News doesn't make any sense to me at all because they don't overlap with anyone else from the group. But hey, I'll leave a link to this chart and the articles to all the other publishers down in the description so you can research these all on your own. I hope you enjoyed today's video, and thanks again for watching.